Oops, they did it again. Half of unemployment money has been stolen. You came here for the truth, so let me unveil that for you. Today, I want to talk about a few topics that generally are not being covered in the mainstream news. Yes, it's there. Yes, it's available, but you're not going to find out about it. This is what we got to talk about. Number one, the Fed. What has the Fed been doing, what they've been up to, and how that affects you. We're going to talk about homeowner wealth. The higher your wealth gets, and that is unrealized gains, your house has gone up, maybe your 401k, your retirement account, that means more taxes for you in the end. And then we need to talk about the theft. So of course, that's something huge. I'm going to unveil that towards the end of this video. You got to stay tuned. Let's get into it right away. The repo operations continue, this time right here, exceeding $500 billion. It continues to go up, and in this case, $535 billion in a single day for this reverse repo operation. A lot of people are confused about repos, asking what the heck is going on. I have done so many times over the course of the past couple years. This is something that will unveil a little bit more of that. You could see New York Fed President John Williams emphasized repeatedly that the reverse repo system was working really well, no concerns, everything is working as it is intention there. This is something I covered, I believe, in yesterday's video. But there's a couple points here that I need to get through because I think that will help to explain a lot. Amazingly, the Fed crams $500 billion down the bank's throat. Banks tell corporations no more deposits because they are losing money on them. Alternatively, banks have to raise capital. So corporations turn to money market funds. The money market funds do not know what to do with the cash either. So the Fed is forced to take $500 billion back. This was expected, and it's working exactly as designed. This is the idiocy of this system that we are dealing with, but people just don't get it. And this is the problem when you have these centralized and generally opaque systems that run behind you. This is all about you and me and everybody else. This is supposed to be a system designed for us, but instead it's designed for a very small group of people, not the 1%. Don't listen to the propaganda, please. We are talking about a very select group of people that generally are unable to be identified. Those are the real rich. Those are the ones who control it all. Consumer prices jumped 5% in May. It's the fastest pace since the summer of 2008. And actually, if you look at the second point here, the 3.8% rise in the core inflation rate, excluding, of course, food and energy, because you don't want to include those, and show you a more realistic view of the inflation rate, was the sharpest increase in nearly 3 decades. Nearly 3-decade increase on the core inflation rate, which of course is what they love to show you all the time, still at the highest level it's been in decades. What does that tell you about what is happening today? Even though they pull out the food, they pull out the energy, they make it in such a way that these indicators that everything is subdued, it still pops to a level we haven't seen in a long, long time. That should tell you that this system is breaking down. Yes, absolutely. It's year over year. If you had a very, very low reading 1 year ago, anything is going to look higher than today. But look at the prices. People say all the time, there's no inflation. It's just deflation. But understand that the prices are rising generally. Generally, the prices are rising. The prices are rising on the raw materials. And then, of course, as I will show you in a few minutes, these businesses are increasing their prices. So what does that mean? You as the consumer have to pay higher prices. Does the CPI matter? Does the core PCE rate matter? Absolutely not. What matters is what you pay. What matters is what's left at the end of the week that you've got left over, your disposable income. What are you going to do with it? Is there anything left? If there is, are you going to save it? Are you going to invest it? Are you going to spend it? What are you going to do with it? And that ultimately matters as we on this channel are seeking an economic outlook in what's going on today. Okay? Homeowners got $2 trillion richer during the first 3 months of the year. Unbelievable to see that. And homeowners with mortgages saw their equity jump by 20% in the first quarter of the year. And, Steve Saretsky had a post on YouTube about this, basically saying, why even work if your home value is going up faster than your salary? And it makes a good point. I mean, you could simply just pull the equity out of your home and live off of that. And some people are doing that. I don't think that's a sustainable solution, of course, but for so many people, they saw the price of their homes going up. And what are they doing? They're simply just pulling because all that equity has been increasing. But what is this equity unless it is realized? So you're seeing the value going up higher and higher. But tomorrow, if there was a crash, if the prices did come down by 50%, I'm not saying they are, I'm just suggesting to you, what if they did? Well, suddenly you don't have a, let's say, $2 million home. Your home is now worth $1 million. How much money did you pull out of that? Is there going to be any problem from the lender? Well, there's a lot of things to consider. And I touch on that point because we'll talk about that more in a second. This right here is just telling you about inflation and what's been happening. And, they get into many different things. I really wanted to cover a few aspects of this. Essentially just saying you don't have to worry, it's temporary. Yes, as you can see in the chart right here, that's the core CPI. It did surge. They're showing you that. It is very high, but what the Federal Reserve is doing and how they intend on managing it is something very sustainable. Don't worry, Janet Yellen said everything's going to be okay. I think that people need to understand it doesn't matter, like I said, what's going on in these different numbers. What matters is what you're paying, and you will pay more. Let me show you this. A net, this is the NFIB, okay? We're talking about small businesses here. A net 40% of respondents to the NFIB survey said that they were increasing their prices. 40% are increasing their prices. So you're going to go to the store and things are going to be more expensive. Or it's going to be the case of shrinkflation. You're going to order something that was previously a pound and now suddenly it's missing a few ounces. You may not notice it. Or if you do, you say, well, it's almost the same size anyway. A lot of people just simply won't notice it. But you're going to pay more. You are going to pay more. In fact, probably already are. You can see the materials of things becoming cheaper and cheaper and cheaper. If you go to, let's say, Costco and you get the paper towels are thinner. You get the toilet paper, instead of being square sheets, they're now rectangles. So they basically trimmed off some from the sides. This is what they're doing. They're reducing the quality. No, I'm still paying $20. GPS, don't lie to me. I'm still paying $20. Yeah, but you've got much less material in that same product. You've got less in the can. You got less in the jar. The quality of the products have been reduced as well. So you are paying more. Call it what you want. But some people out there actually like to tell it like it is. Some people out there don't mind swallowing the Buckleys because it works. All right? Look at what's happening to the prices of used cars today. Oh, no, it's just because of the temporary problems that we're having. Oh, no. You know what, GPS? It's just because of this. It's just because of that. It's just because the Fed said so. It's just because the sun came out and, there was a sunset at this time. And, it's because the sky is blue and it's because of this. Make all the excuses you want in the world. Any excuse you want. I'll listen to it. Okay? I'm your punching bag. Been here for 10 years. Been a punching bag for 10 years. Housing market update. Is the relief from the red hot market on its way? They've actually suggested, and this is actually happening, that the price increases, I should say, are leveling off somewhat. If that's really possible. Well, that would be a good thing. I'm not sure if it's actually happening, but I want to look at this. A lot of people are pushing ahead, and we'll talk more about this in the Money GPS Insights for today. They're pushing ahead for a wealth tax to basically tax the rich. All right. Balance sheet of households and nonprofit organizations. This comes directly from the Fed's own website. And you could see assets, liabilities, and net worth. You're not going to be able to see the numbers there, but essentially from March 2020 and on, it has accelerated at a pace it has never done before. Okay? So the wealth of people in the United States has increased faster than we've ever seen it. And so, if you look at those assets right there, those are the green bars, that tells you that people have gotten richer. But who are those people? Who owns most of those assets? Well, of course, it's the wealthiest people. So right now, if you think about this, this is the fastest and largest wealth transfer in the last 1 year that we've ever seen in history. Think about that for a second. Fastest and largest wealth transfer ever in history. And why did this happen? How did this happen? Stimulus, quantitative easing. If you can't see that connection, you got to understand this at a deeper level. Quantitative easing, stimulus measures pushed up the markets, pushed up the housing prices. Low interest rates kept that upward momentum, and the rich got richer. Are you willing to accept that truth? Let me know. Number 1, as inflation rises, the rich get richer. Simple matter of fact, because that inflates the prices of everything, including the assets, whether it's real estate, whether it's stocks, it's bonds, it's anything. That's the way this works. Number 2, you've got governments today that are pushing towards a wealth tax, or more importantly, an unrealized capital gains. And number 3, believe it or not, the middle class is going to pay higher taxes. They're going to put laws in place. They're going to put through new measures. They are going to figure out a way to take from the middle class. Unrealized capital gains are what you need to know. Your house, maybe you bought it 15 years ago and you live in one of these major cities where the prices have absolutely skyrocketed. You're just a regular individual. You bought it for $700,000-$800,000. Now it's $3 million. Okay, maybe you got a 401k and every month you've been putting in some money into it. You've got a retirement account, pumping money in, and your employer's been matching that. Suddenly your net worth is $5 million. But you're just an average individual. You and your family, you're just trying to keep up, pay your bills and so on. But according to this new system, you're going to be paying wealth taxes because they're going to lump you into those same groups. Now, that's a very unpopular thing to say. But if you read the actual code, if you read the way it's written, this is coming for everybody. They're going to get it and they're going to sell everybody that is just for a very small percent of people. But when you look at who's writing the laws, you're talking about multimillionaires, millionaires, or the friends of multimillionaires and billionaires. And of course, they're going to make this happen. Let's talk about this right now. Are you seeing this information around? I know I certainly haven't been seeing this on the front page of the news, that's for sure. But half of the emergency unemployment money may have been stolen. I talked about how dangerous doing something like this was. I showed you these individuals that were getting caught. They were buying Lamborghinis. They were doing all these silly things, getting caught. And I said, every time I showed you that, I said, imagine how many people didn't get caught. Criminals may have stolen as much as half of the unemployment benefits the U.S. has been pumping out over the past year. Why it matters? Unemployment fraud could easily reach $400 billion, according to some estimates, and the bulk of the money likely ended in the hands of foreign crime syndicates, making this not just theft, but a matter of national security. We don't know where the money is going exactly, but just think about this. Okay, they mentioned a few points. I want to just really, show you what's been going on here. They all knew fraud was inevitable, but decided to get the money out to people who desperately needed it. It was more important than laboriously making sure all of them were genuine and so on. So people, they were just, apply, you get your money, apply, get your money, apply, get your money. Okay? And they just suggest to you that, maybe there's about $400 billion worth of fraudulent claims. As much as 50% of all unemployment monies might have been stolen. 50%. $400 billion. It's shocking. Whether that's true or not, we never know. But that's, to me, that's very believable. So what does this mean? It means that you, as an individual, your tax dollars have been going to bail out people you don't know, don't care about, and likely don't deserve the money. This is why you're trying this huge system of taxation. You're trying to get it from people and bring it down into those who actually need it. And those who actually need it get the crumbs. That's my point. That's my point. This is a very unpopular thing to say. People will hate me. Put your hate comments down below. I should stop talking about this subject. People hate it. If you like the video, give it a thumbs up. And if you haven't checked this other video out, please do. Take care.